Bitcoin is sending a series of very different signals, and in the meantime, I've been nominated for the InvestCuffs award. Are you curious what all this means and what we can do about it? Let's get started. Hey there, welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and the altcoin chosen by you. We meet up and, as you already know, we take a look at the charts from three different perspectives: technical, on-chain, and of course our outstanding fire charts. As a result, you won't find such condensed analytical knowledge anywhere else on the internet as what we serve up here. Thank you for appreciating that. The number of our subscribers keeps soaring. Right now we're fighting for 62,000, but at the same time I know that a lot of people who watch these videos aren't actually subscribed to this channel, so this is the perfect moment to hit subscribe, give a thumbs up, and leave a comment, whether it's for the contest or something else. Something else which I'll talk about in just a moment. And remember, the content in this video absolutely does not constitute investment advice. For advice, go to a licensed advisor, or just do what I do your own research. If you acknowledge that, grab your coffee and let's dive into the charts. Of course, we start our analysis with Bitcoin, which is collapsing under the weight of the Fed's decision to cut interest rates, something that in principle is very positive not only for crypto markets, but for financial markets in general. Nevertheless, as we can see, this was a sell the news event. And we can see that the price of Bitcoin has dropped to $112,000 or even below. However, now looking at it from the perspective of candle closes, 112 is being defended. In the short term, we see declines, but in the longer perspective, we can see that this still remains a consolidation. Nevertheless, some very important moving averages for us have been broken. The 50-day moving average, which is this red line, has so far served as support. And I was basically counting on another rebound from it, as well as the 100-day moving average being broken. As for the latter, I don't have major concerns, because in itself it doesn't actually serve as support, but rather its vicinity provides support for the price, which has been proven many times in Bitcoin's history. The 100-day average itself has often been slightly breached, but then there were situations where rebounds basically occurred from those levels. For example, right here. Here we can see such slight breaks, breaches of these zones basically, and then a rebound upwards. That's why I see the 100-day moving average here as significant support, especially since it is quite well correlated with the $112,000, which is our horizontal support that has already proven its value, for example, here as well as here, where there were struggles to break through this level, which at that time served as resistance. Now we are counting on this support to hold. What's more, I'm looking at the TD sequential indicator. It isn't giving us any clear signals that the trend might reverse, but that's not the most important thing here because something else is showing up specifically on the RSI, and on the RSI we are seeing, attention, a bullish divergence. The RSI itself doesn't look positive at this moment because the indicator's value has dropped below 50. Let me remind you that 50 is the boundary between the bull zone, which is up here. Basically, when the RSI is in the bull zone, the bulls simply have more momentum, more drive to push prices even higher. When the RSI value is below 50, then 50 itself can act as resistance. And we can see that on the RSI, the 50 level is ahead of us, and the 50-day moving average is also ahead of us on the chart. There may be a certain correlation here, so if the 50-day moving average is reached at the same time as the 50 level on the RSI, there could be increased selling pressure. I'm curious, though, whether in that case buyers might actually take more initiative, and the fire charts, which I'll talk about in a moment, tell us a lot about this. Nevertheless, I mentioned a divergence, a bullish divergence, and I'm going to illustrate it right now. Here, we clearly see the significant lows on the price chart, and similarly here we also observe the corresponding lows on the indicator. These particular lows collectively form a hidden, what is commonly referred to as a hidden bullish divergence, which could potentially mean that this is a very important factor that might indeed drive Bitcoin's price significantly up to $50,000, or perhaps even a little bit higher than that. But be careful, this divergence is not at all obvious, and I would even say it's somewhat dangerous. Because if the value of Bitcoin drops below $110,000, it will be invalidated and therefore will no longer be relevant. However, in the short term, I see a lot of potential for it to actually push the price of Bitcoin upward, which we can already observe during the current trading session. At the moment I'm recording this, Bitcoin is up by 0.75%, so this is a positive signal indicating that there is indeed a reaction to the divergence here. What's more, we are seeing a very similar divergence, also hidden and bullish, on the weekly chart. Every week, basically, when I greet you on my Twitter, I post the first entry that talks about how the week closed, how the previous week ended. And here, we've been talking for a few weeks now about the fact that we're dealing with a bullish RSI divergence, a hidden bullish RSI divergence, where we have a rising price and a falling indicator here. If we connect these lows, we see a downward trend. Here we have an upward trend, which may cause the price to actually break out to the upside in the medium term. This does not mean at all that Bitcoin can't deepen its declines and go a bit lower, because this divergence will still be maintained even then, which will mean that, in my opinion, Bitcoin still has its ATH ahead of it. And for now, this is not yet the end of this cycle. When we talk about the end of the cycle, it's worth recalling exactly where the boundary between a bull market and a bear market lies, and pay attention. What I'm about to mention is not a definitive factor that always indicates the boundary, but it is a factor that has been confirmed many times. So if we see its confirmation on other indicators, it's definitely worth taking into account. I'm talking here about the 350-day moving average, that green line we currently see on our chart, which has repeatedly throughout Bitcoin's history. If we look from a broader perspective, even in the current bull market, it served as support here, here, and here. This is a line that has also historically proven to be a kind of boundary between a bull market and a bear market. When it is broken, as was the case here in 2021, and then tested from below, it can only indicate that we are dealing with a bear market. And currently, the significant bear market line, this crucial boundary line, is precisely located around the specific price level of $98,206, which is still quite a considerable distance from the current market price. But let's not forget that such values were actually reached by Bitcoin as recently as June of this year, so not that long ago. Nevertheless, we can see that as long as Bitcoin remains above this value, there are basically no indications suggesting that the bull market might actually be coming to an end. At most, this is just another rebound point, which, considering how significant the 350-day moving average is actually rising quite dynamically and may soon once again serve as support for the price. The technical chart can basically leave us confused, not sending clear signals about what might happen to Bitcoin in the near future. However, in this case, fire charts perfectly complement it. Let me remind you once again what fire charts are. Here we are dealing with a blue line, which represents the price of Bitcoin, and there are some horizontal lines that illustrate the order books of the largest cryptocurrency exchanges in the world. These lines, these horizontal lines that are above our blue line, represent sell volumes. Those that are below represent buy volumes. And we can see that we are currently dealing with a certain trading zone where Bitcoin is currently located. And this is a zone that acts as support. In addition, we can look for further support levels a bit lower. And you also asked me on my Twitter as well whether Bitcoin has a chance to drop to $110,000 in order to bounce back from that value. And I have to admit that right at the level of $110,000, a somewhat stronger price support is forming, which carries volumes of nearly $17 million waiting for Bitcoin to drop to that value so that purchases can be triggered. Well, in addition to that, we can see that the lower we go, the more of these buy walls appear, and above the current price, that is basically from the value of $113,360, exactly up to $117,000, $118,000. There really aren't that many sell orders. This could mean that if Bitcoin manages to break through the level it's currently at, the resistance it's currently facing, which is 113,400, there could be a very dynamic breakout upwards and a return to the values we saw just before the Fed's decision was announced. Besides that, it's worth paying attention to what's happening on the CVD, where we can see who is currently buying. And while most wallets are currently stagnant, we do see some activity in the green wallets here. They are positioned quite low, but they have woken up a bit and are buying. These are wallets that hold between $1,000 and $10,000 in their balance specifically to buy Bitcoin. We also see whale wallets, the brown ones, which are currently buying very intensively. The whale wallets are those that have between $1 million and $10 million in their balance. And as we can see, they are actively participating in trading on the market. Kanga has received as many as 3 nominations for the very prestigious Invest Cuffs Awards, which will be handed out in mid-October in Warsaw at the official gala. And attention, I'm lucky enough to be among the nominees. The categories in which we are distinguished include Web3 Lawyer, where you will find Maciej Grzegorczyk. I strongly encourage you to cast your vote for him. In addition, there's the Web3 Exchange category. No need to explain here what you should highlight in your vote. And then there's the Web3 Market Analyst category, where among 6 nominated competitors, I also found myself included. I would be extremely grateful if you cast your valuable vote for me. If you see value in what I provide here for you, if you see value in what I share on Twitter as well, your vote will mean a great deal to me personally if you choose to give it to me. I also kindly ask you to leave a comment under this video letting me know so that I can personally thank you for it. As for the voting link, you will find it directly below this video. Let's move on to the analysis of Ethereum, and here, just like with Bitcoin, we see declines that reach almost $4,000. Well, this is a level I've been watching for quite some time, and I mentioned that I placed a long there, just like I did on Bitcoin and on Chainlink. Unfortunately, those longs ended differently, but I'll get to that in a moment because I learned a lot of lessons from it, lessons that I am very eager to share with you as well. Anyway, what's happening on the chart right now? Well, we can see that besides reaching a value around $4,000, which is a very significant support level, we have the 9th consecutive red candle on the TD sequential indicator. So this is a signal that Ethereum, in its current local downtrend, might reverse and move higher. The target for Ethereum right now, in my opinion, is the 50-day moving average, which is around just under $4,400. That's a value that could be reached. In addition, this aligns horizontally with the consolidation we saw here. It's located quite close, so a wick reaching up to that value, followed by consolidation and then an attempt to break through later, is entirely justified. Why this way and why consolidation before the breakout? Because we can see that the RSI has lost the 50 level, we're seeing declines and we'll probably have an attempt to test that 50 from below as resistance. And a lot depends on when exactly that moment occurs. At the moment, I'm watching Ethereum. I'm definitely interested in buying Ethereum at its current value and perhaps holding it at least until it reaches the value of the 50-day moving average. What will I do with it afterwards? Well, we'll see. We'll see how the price moves exactly on the chart and what the indicators are telling us. And now ETH on fire charts. And while the fire charts themselves don't tell us much, because here we see some price action oscillating around certain supports and resistances, but within a fairly tight range, the CVD, on the other hand, is sending us very clear signals. And these are signals that tell us, let's start with the orange line, because that's actually the most encouraging, that retail investors are starting to buy. Ethereum, at its current values, is attracting interest from retail investors, although we've only been observing this interest for just a dozen or so hours. In addition to that, there are buyers who are in a longer-term trend. This trend has actually been going on for about 2.5 days now. That's the green line, representing those who hold between $1,000 and $10,000 in their balance and are buying Ethereum. And besides that, we also see whales that are moving, but in a slightly different way here because we had some upward moves, and here we see a drop down. This is still that brown line. And here for about 2.5 days now, we can see that the whales have been in an upward trend, and they are currently buying Ethereum. The altcoin you've chosen for today is Polygon, formerly known as Matic. Polygon, which during the last update, when we talked about it, we mentioned that it was around 30 cents and might break through that value in order to enter a long-term upward trend. This was due, among other things, to the head and shoulders pattern that appeared here, where we have the head marked with the letter H, and the S is indicating the shoulders, suggesting that there could be a reversal of the long-term downward trend that Polygon has been in up to now. And we can see that from the 30-cent level, there was a rebound and a decline from that 30-cent mark. We mentioned that this 30-cent level coincides with the low that was here, 28.30 cents. There is quite a deep low here, which was marked during the previous very significant, very strong downward trend, and we mentioned that resistance may occur here. As long as this level is not broken through, we cannot talk about an extended upward trend for Polygon. However, in the short term, I see a chance here for Polygon to actually push higher. Why? Because on the indicator, we have the 9th downward candle on the TD sequential. And in addition, we see the RSI dropping very low to levels close to 30, which are values where Polygon has often bounced back. In particular, strong rebounds occurred when this drop to that value coincided with the 9th downward candle on the aforementioned TD sequential indicator. So here I see quite a good chance for Polygon to regain the value of the 100-day moving average, that yellow line, and soar towards at least the 50-day moving average, which is the red line. So these could be gains basically from this point to the 50-day average of nearly 12%, which is actually quite good considering the current state of the market. So in the short term, when it comes to Polygon, I see a very good chance for growth here. In the medium term, I would be cautious around 30 cents. So if the 50-day moving average is broken and Polygon once again reaches 30 cents, we could see another round of sell-offs here. However, if the 30-cent level is broken, I expect that this will already be a long-term scenario. So in the long term, Polygon could once again enter a really quite solid upward trajectory. And now Polygon on the fire charts. Although we don't see any significant supports or resistances here as they don't appear on this chart, let me remind you that here we have our blue line indicating the price of Polygon, and above this blue line up to the value of 28 cents, we don't see any significant selling volumes at least. So only at the value of 28 cents do these volumes reach about $200,000 in Polygon, just waiting to be dumped onto the market. Besides that, buyers are appearing on the CVD. We can see this very clearly. Among the buyers are the purple wallets, which are the second largest. These are the ones that hold between $1,000 and $1 million in their balance. And we also have the green wallets, which are buying as well, just like we saw with both Bitcoin and Ethereum. When it comes to potential support levels, in the event of greater turbulence, we can still see 20 cents here, but that's a value quite far from the current price, so it would only come into play during more significant volatility. Let's take another look at the chart to see where this could be located. Well, that's basically below the lows we've identified at the present time, so it would be around those lows that occurred right here. Here, buying opportunities may arise that could cause Polygon to rebound even more strongly, but considering how the indicators are currently positioned, I don't see much chance for such a drop. And if you'd like me to analyze your altcoin, remember it's a very simple thing to do. All you need to do is register on Kanga, and you'll find the registration link in the description of this video. Browse through the cryptocurrencies we have and choose the one that interests you the most. Just remember 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be any memo coin. And third, it can't be KNG. So you know what to do. Let me know in the comments which crypto you'd like to see in the next video. Technical analysis is not just the art of reading charts, but also learning from mistakes, preferably other people's mistakes. Unfortunately, I had to learn from my own mistakes because, as you probably know, recently I shared on my Twitter about the long positions I opened on Bitcoin, Ethereum, and also Chainlink. While my position on Bitcoin is still open and there's a chance it might bounce back quite well, in the case of Ethereum and Chainlink, I was unfortunately liquidated. Why was I liquidated? Because I broke my basic rules and also made a typical psychological mistake. I wrote about these mistakes on my Twitter on Monday in a longer post where I listed 5 factors, 5 mistakes that I made recently, specifically by going long in a way different from what I had originally planned. This is very important. So if you are also quite active in the futures market, or if you're simply new to the futures market and don't want to make mistakes, or you don't want to learn from your own mistakes, I encourage you to check out my Twitter and simply read about what I did wrong and exactly what lessons I learned from it. I'll also add that you often ask me in the comments whether there's a chance for my posts to be in Polish since they appear in English. Of course there is. If you go to my post, if you click on it and scroll down, there's an option there, Translate Post. You can select it, and at that moment, the exact same post will automatically appear in Polish. Of course, these translations sometimes leave a bit to be desired, but generally you can understand what they're about. And here's what's happening with Bitcoin ETFs in the United States. We saw that basically as we were waiting for the Fed's decision regarding interest rate cuts, the buying volumes were increasing. Currently, for the past 2 days, we've been seeing sell-offs. These sell-offs, as we can see, are not actually as significant as they were a month or a month and a half ago, when we observed some declines after the purchases that took place between April and July. Currently, these declines are much smaller. So basically what we're seeing on the chart right now only confirms what's happening on the technical chart. So in fact, we have a consolidation. There are no factors indicating that the price might drop significantly in the near future. It's time for a merger analysis. Today, I've prepared 5 indicators for you. The first one will be what's happening with cryptocurrency wallets that have any Satoshis in their balance. These are the wallets that represent retail investors. Retail investors who have recently been accused of basically not showing up in the market. Well, the chart tells a different story, and we actually talked about this basically a week ago. Let me remind you once again that the orange line is the indicator line, the gray line is the Bitcoin price line, and we can see very clearly that the orange line in a medium-term trend keeps rising, which means that retail investors are appearing in the market and that they are currently buying Bitcoin. But be careful. The recent turbulence has caused us to see declines since the peak that was reached here 3 days ago. Is that a lot? Well, basically that peak was reached 3 days ago, and in my opinion, nothing major is happening here. This is not a signal that any major sell-offs are about to happen here. Rather, the trend will likely continue, and we will definitely be keeping an eye on it. Besides that, let's take a look at those wallets that hold at least 1 Bitcoin or more in their balance. And we can see that there is a kind of flattening happening here. We have a basically downward trajectory here, very slight, but let's note that it is indeed a downward trajectory. Well, in my opinion, there is absolutely nothing concerning happening on this chart. As for those wallets that hold at least 1,000 Bitcoins, we've been seeing increases here for several days now. These are wallets which, as we know, are very often ETF wallets, since we've already identified this much earlier. And for the past few days, starting from a low point reached on September 8th up to today, they have been accumulating, taking into account possible turbulence along the way, as well as the fact that basically from September 21st until now, we've been observing some slight declines. However, these are not declines that could be considered concerning in any way, because a broader perspective shows us that what we're seeing here is more of a consolidation. And finally, the last wallets, meaning the whale wallets, which are those holding at least 10,000 Bitcoins. And here, something is happening that could be considered concerning, because we see a very long downward trajectory on this indicator. We can see that new lows are being set almost at levels that are essentially multi-year lows, because soon they might coincide with those lows that were marked, attention, in 2021, around the then all-time high. So is this a concerning factor for me? No, I also look at the market globally and fundamentally, and I know that a lot of wallets that had been dormant have recently become active and are selling off their Bitcoins. But besides that, at the same time, the price of Bitcoin is still hovering at very high levels, and demand is not weakening at all. We see institutional interest, we see interest from ETFs, and we also don't see something that's very important here, namely confirmation of this indicator, along with other critical deviation indicators that would tell us we're potentially at the end of a bull market. As long as these don't align, I basically have no concerns about what's happening with this indicator. And then there's also the Bitcoin balance on exchanges. In the last video, we talked about how we were on an upward trajectory with this indicator basically from June to September. And here we can see that there's a certain reversal happening, at least a probable one, in this local trend. We see declines when it comes to the Bitcoin balance, but in recent days there has also been a rebound. Well, this rebound is of course correlated with the declines we've recently seen on the charts, but since Bitcoin is currently recovering, or at least I assume that's what might happen, this trend will most likely continue downward. I will definitely keep you updated if I notice any differences on this chart. That's it for the analysis. It's time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video. So it can be Bitcoin, Ethereum, or Polygon. Present a technical perspective, combine fire chat sentiments, fundamentals, whatever you like. You can choose anything you want, and remember, you don't have to agree with me. The author of the most interesting comment posted under this video by Friday at midnight will receive 20 KNG from me. And the winner for the previous episode is HockeyClocky22, who analyzed Bitcoin. Congratulations, HockeyClocky, that was quite a nice comment. Please contact support to claim your prize. That's all for today. If you enjoyed this, and I truly believe you did, and it's your first time here, make sure to subscribe and join me again next week. And don't forget about the Invest Cups contest. I'm counting on your vote, and let me know about it in the comments. And finally, as always, please rate this episode on a scale from 1 to 189, where 1 means it's weak, bland, and you don't want to see any more. 189 means it's fantastic and you want more of it. And if you do want more, then I'll see you soon. Bye.